It's time to spotlight this week's Mag 7 earnings. Joining us now is Mian, the Director of Research at Zacks Investment Research. Shiraz, thank you for being with us ahead of this all-important week. As far as the Mag 7 results, how important is their performance for the broader market?
It is very important because they account for so much of the S&P 500 index in terms of the market cap. And then in recent years, they have also been really sizable contributors to the total earnings part for the market as a whole. So what happens to them will determine the aggregate growth picture and also the narrative for the outlook.
And what are your expectations overall from the 5 that we're getting this week before we dive into more specifics on each company?
So the growth is expected to decelerate relative to what we actually got from the group as a whole. About 26% was the earnings growth in Q2. The expectation is just a hair south of 12% for this quarter, a bit higher on the revenue side, so some margin pressure. 11-12% is the earnings growth expectation for the group.
And as far as the group itself, is there a name that you'll be watching most closely?
So that's interesting because Amazon and Apple really have been laggards. Apple has all these issues, the China exposure. Amazon has this issue with the tariffs. It has some mishaps on the cloud side. But I think the key players, Google, Alphabet is the one that over the last couple of quarters really has come back into its own. I have long been of the opinion that the market's skepticism about the company's AI offerings was perhaps overdone and unjustified. And I always felt that perhaps in the not too distant future, the value folks will start sniffing around. And we saw that with Alphabet's results and also with the stock performance. So I'll be very curious if this quarter's numbers will help the company sustain that momentum. It's been on a good run lately. And we'll have to see if the numbers will validate that performance.
Yeah, certainly has been on a good run, up about 65% in the last 6 months for Alphabet. And when we talk about Alphabet, usually their performance hinders on either these ad revenue numbers or their AI investment numbers. Do you think that one will be more important than the other in this report?
I think it's all about the AI. So the recent performance, it's a combination of factors. The resolution to the DOJ suit investigation was a useful, favorable catalyst for them. But I feel that the market is coming around to the view that perhaps the fear that the AI world will be problematic for the company's search monopoly is perhaps overdone. And perhaps it isn't as much of a laggard in the AI race as everybody had started assuming. So I think it's all about AI. The ad revenue is always important, and that will be looked at. YouTube has come into its own and become like one of the largest networks on that side too. So all of that will be important, but I think it's all about AI. What the company says in terms of the monetization of AI, the spending level will be important, and then the cloud. We saw a fair amount of momentum in the last quarterly numbers from Google on the cloud front too, and it'll be important for the market to know that that wasn't just a one-off or a temporary, and it's something sustainable.
And staying with this AI spending theme that we're seeing, 4 of the 5 companies reporting heavily investing in this AI infrastructure. Apple's been more muted in terms of its AI spend. Do you think that puts Apple at a disadvantage coming into earnings?
It appears to be, but then Apple all along has had, like if you go back to the time when there were other players that had come out with smartphones or with tablet devices, and even from the Steve Jobs days, they would talk down those efforts, but then we would find out that they had a product in the works as well. To the extent that competitors like Samsung, for example, there's some talk that the OpenAI folks are working on handsets too. To the extent that we don't find credible competitors in the smartphone or the handheld space come out with killer products that use AI, I think Apple will be fine in the long run. It'll see what model works best, and then it can go ahead and adopt that. But as far as the market is concerned, it does see that as a liability. That the fact that the company isn't spending as much, isn't as much in the AI race, the market and many investors see that as a handicap.
And Shiraz, let's say that one or two of these companies reporting in the next couple of days comes in either in line or disappointing in terms of earnings or their guidance. How much of a ripple effect do you think we're going to see in the markets? And also, what might that do to sentiment?
I think it'll be critical. You would recall, if we go back to the beginning of the year, and when we had the Chinese AI model come into the public domain, a lot more cost effective, with the results that were competitive with what these players were doing. And there was a spotlight on these players, whether they'll stick with their spending plans or they'll rein those in. And we saw then in the subsequent 2 quarters that they said no stopping, and this is a competitive challenge, and they see no reason to stop. So if it's in terms of the actual operating performance, or some tentativeness in terms of the outlook on the spending front, I think that'll give credence to these AI bubble talk that isn't going away either. So it's important. It'll be critical for overall market sentiment. We should keep in mind that the broader macro is also heavily dependent on what these companies are doing. So a big chunk of the macroeconomic growth in the recent past has also been tied to spending plans from these companies. So not just the profitability of these companies, but it has implications for the U.S. economy as well.
And last question, Shiraz, if you had to pick one name in the 5 that are reporting this week that is most likely to disappoint or might not execute on guidance that's expected by the street, which company do you think that would be?
I would say Amazon. No particular reason for it. It had a misstep on the cloud front. I think it seems to be more exposed to the tariff question as well. And Amazon has a history of not caring about what the street thinks. So I think all the others seem to be more in tune with pleasing the market, or at least coming up with something that'll show that they're making progress. Amazon has a history of simply not caring. That's perhaps harsh, but I think that'll be the one company that'll be in my spotlight.
All right. Well, Shiraz, thank you for being with us to preview all of that ahead of this all-important week of Mag 7 earnings. That's Shiraz Mian, the Director of Research at Zacks Investment Research.